Hey everyone, I'm Nick Van Eck. I'm the CEO and one of the co-founders of Agora. We're a stablecoin issuance and infrastructure platform. And today I'm going to talk a little bit about the stablecoin market as a whole, where we see the future growth levers, and then also a little bit on the solutions that we're providing to a range of different customers. And so we started the business with the intent of bringing traditional businesses on-chain, right? For many years, folks were building crypto companies for crypto founders and crypto teams, but weren't really bringing blockchain to the rest of the world for why it's valuable, right? Which is instant settlement, low transaction costs, composable liquidity. That all has to do with money at the beginning, and we're big believers that this is going to eat all the financial services and payments over the next 20 years. And the status quo was a duopoly, and we came to fix that. And so if we think about the market opportunity for issuers, I think at a minimum it's the Eurodollar market, right? And today that stands at around $13 trillion. That's US dollars in offshore bank accounts. And the reason that we think that this is the market is because everyone that is operating in the Eurodollar system has to move between correspondent banks, SWIFT, and really has a huge settlement problem when it comes to moving money. And stablecoins are 100 times better, right? If you are moving money from the United States to Hong Kong, it could take days, be held up by banks. You can move $100 million in stables today in 2 seconds, right? We actually had this problem ourselves when we were raising our seed round of capital. We had angel investors in Singapore, Korea. One of our angels in Korea, his dad actually was the president of Standard Chartered in Korea. It took 10 business days to hit our bank account. We had another angel that was sending money from Singapore. It took 22 days to hit our bank account, which is crazy. And I think this is a problem that's really not familiar to most Americans, because if you're moving money within the States, it's very easy. Anyone can get a bank account. Venmo is just as good if we're being intellectually honest, but it's when you move outside the United States, that's where the real opportunity lies. And beyond that, we think that stablecoins are going to solve the global banking gap. Today, with an internet connection, you can now download a wallet and have stables in your account. I was in Turkey 3 weeks ago. They have an inflation rate at about 35%. Many folks there were originally just using Bitcoin as a way to sort of hedge and maintain their wealth. Now they're using stables. And so if you look at places like Turkey, Argentina, Thailand, where there's either poor financial infrastructure, high inflation, they're now onboarding themselves to the dollar system, right? And they're using stablecoins to do that. And so we think there's actually a very large opportunity to capture a billion plus users just in stablecoins and really make their lives better than it is today, right? If you're an Argentinian through no fault of your own, you've lost your wealth many times over throughout your life just because of monetary policy in your country. And today, stablecoin supplies are at all-time highs, but really they got going about a decade ago with USDT and some of the other exchange-backed stables. DeFi Summer that also helped proliferate stablecoin adoption, but now there's legislation that is coming to the floor. We expect it to pass in the United States hopefully this year, and that will drive increased adoption in non-speculative use cases. And this, I think, chart really highlights not only just year-over-year growth activity, but where and why it's being used. And so if you look at Eastern Europe, Latin America, Sub-Saharan Africa, you'll notice that the exchange growth and volume relative to DeFi, on-chain, other is very different. And that's because in these places, stablecoins are a lifeline, right? They're actually using it in their day-to-day, where when you go to North America, it's primarily centralized exchange, crypto trading volume, because like I said before, we all have bank accounts. It's fairly easy to move money. We already have access to this great financial system within the United States. And now, I think what this chart really shows too is that for the first time, stablecoin growth is occurring primarily by non-speculative flows, right? So BCG actually put out a great chart a few weeks ago where they think about 88% of stablecoin volume comes from centralized exchange activity, right? That's why Tether grew to become the behemoth that they are today. They really dominate the centralized exchange crypto trading use case. Circle came on board and have grown through DeFi and other mechanisms, but we're really starting to see a bunch of different growth levers take off. And so while crypto prices fell this year, you had stablecoins continue to grow very significantly. And I'll chat a little bit more about that later. And so, I'm not sure why this slide isn't working, but I guess I can go to this. So our team, why we're winning today is we're a first mover team that is financial services background. So one of my co-founders was head of global operations at Galaxy. I spent my entire career in finance, and then our CTO, Drake, was a lead developer at Frax, but also rewrote the payroll system at ADP when he was there. Right? And we think that you need to have a team that is fit for purpose, that not only understands the technology side, but also capital markets, because capital markets, whether it's trading, credit, will play a tremendous role in actually driving adoption of issuers, but also this technology. So some of the future growth levers that we see, payments, both on the merchant side and cross-border. The FX market is now just starting to take off, and I'll get into some of the things that we're doing on that side, not just with US dollar stablecoins, but non-US dollar stablecoins, institutional finance and RWAs. As traditional funds come on chain or investment products, stablecoins are going to be that cash settlement mechanism between these different products. Enterprise treasury management, I like to talk about this a lot, but my dream customer in 10 years is Pepsi's finance office, because they have suppliers all around the world. They're moving money from the US to Mexico, Singapore. Right, and stablecoins really solve their problem. Emerging market dollar demand, so we'll continue to see adoption just because dollars are a better form of wealth preservation than the status quo in many EM countries, and then trade finance. Just unplug, replug. I don't know. Switch slides and it went back. I think it might have gotten overloaded. Can we just get it up there? Perfect. So future growth levers. Merchant payments, right? So stablecoins are going to be, what we view as disintermediating a lot of the card networks in acquiring and issuing banks today. Cross-border payments. Today, cross-border payments is a multi-trillion-dollar market. Wise, which is $10 billion publicly traded company, thinks that they only have 1% of SMB cross-border payment volume. And so this is a massive market that has really not been tapped by stablecoins yet. There was an Artemis report that came out earlier today that actually suggested about $3 billion in cross-border payment volume is being done today using stables, but relative to the rest of the market, that's a very small amount, and so there's a lot of room for opportunity. And if we look at consumers, it actually has a much higher rate of adoption, because if you're someone that has family in India, Nigeria, Mexico, you don't want to be paying 10% or 5% to send money back home. And stablecoins are a super seamless way where you can on-ramp with an account at Coinbase today and then send stables back home, and then they can off-ramp it locally. And so cross-border payments on the P2P side has already had massive adoption, but this is obviously much smaller than the business market. And for issuers, we think there's a big opportunity to tap into this payment flow, right? Beyond just float income, really using yourself as a conduit for cross-border money movement. And so some of the things that we're doing today is partnering with local payment rails, local OTC desks, exchanges in Latin America, folks in the UK, for their GBP stable, to really close this whole end loop of flow where you're either on-ramping in the United States and then off-ramping somewhere else. And today there's different businesses that are enabling folks to go from PIX in Brazil all the way to the Euro banking system in less than a few minutes, right? Which is crazy. And so the way that they're doing that today is you have Brazilian real in Brazil, that's going into stables. That stable is then being sent to Europe in a few seconds, and then that's being swapped into a Euro stable and then off-ramped locally, all within a few minutes, which is 100 times better than it taking several days or weeks at a time. We also see the FX market as a huge opportunity. Today, US dollar stablecoins are about 99% of the market. We think that they'll still continue to be the majority of the market, given that US dollar trade, US dollar denominated trade dominates global commerce. But we think there's an opportunity for folks like the Mexican peso, the euro, et cetera, to take share, right? And so we're working with a lot of different providers, right? So, for example, Bitso in Mexico, we've set up a pair with their MXNB, which is part of their Juno platform. Agant in the UK, they're setting up their own GBP stable. We're working closely with them, and then a number of others on the euro side. And so we really want to lean in to the FX market because we think that's a blue ocean of opportunity, right? And folks like Tether aren't really playing in that segment because they're not licensed, they don't have the audits. And so folks that are more on the traditional financial services side, on the PSP side, want to use a regulated stable, and we fit that bill. Something that we're also doing with institutional finance and RWAs, we think that most markets will come on-chain. This will take a very long time, but they will need a cash settlement mechanism. And so some of the things that we're doing today are working with the folks at Securitize, Van Eck, BlackRock, because they've tokenized money market funds. But those tokenized products still have the same issues that traditional products have. You can't off-ramp them on the weekends when banks are closed. And so something that we've built at Agora, and again, this is why being the issuer is very strategic, is a swap function. And so we can take Van Eck's treasury bill product as collateral at 2 a.m. on a Saturday and say, yeah, we'll take that $50 million from you, Mr. Market Maker. We'll mint AUSD against that. That is now backing AUSD, and now you have a liquid cash mechanism to move to other markets or use in various different ways. So this is some of the things that we're doing here. Treasury management is something that I chatted about a little bit earlier. The improvement in settle time alone, this is what takes the cake, right? It's being able to move money within your own entities, but also to external entities in seconds is much better than the status quo, where you have large multinational corporates spending billions of dollars a year on pre-funding and factoring, right? And so Robinhood actually has talked about this in their own earnings reports, where they're already using stablecoins to do this, right? And it's just that much better. And so we think some of the barriers to adoption today are just education, different enterprises getting comfortable with the technology and custodial solutions, but also regulation. And as we get regulation, a lot more folks will start to come into the space and use stables for treasury management. This is just some stats on EM dollar demand, but you can see that the focus for these markets is really much more on the stablecoin side versus altcoins or some of these speculative governance tokens, right? The global population wants dollars. You can see this as well in Argentina. Trade finance, though, is another important gap. So we're working with a Brazilian trade finance company, and one of the things that they're doing is working with local producers, local farmers, and financing the goods for them so that they can get to port. And they're using stablecoins to do that because you have much faster settlement, you have a view into their collateral. And so this is a tremendous market. Tether themselves have actually been investing a lot in the trade finance category, buying agricultural producers, extending credit. We're doing a lot of the same things. We don't have the balance sheet that Tether does to go buy large agricultural companies, but we're working with external credit providers to facilitate credit to a lot of these businesses that are using stablecoins as a wedge for us to gain adoption. And so a little bit more on what we're building. Something that we felt was most strategic is owning the money layer first, right? You have all these new rails, Ethereum, Solana, Avalanche, that need to mesh with the legacy rails. That's correspondent banking, SWIFT, SEPA, PIX, UPI, and we're using AUSD to bridge those different gaps. Right, so we're setting up local bank accounts in different regions. We're working with a number of different on and off-ramp providers that can help sort of use AUSD and extend AUSD's networks to these different markets. But something that we're planning to do next is really go into the on and off-ramp and orchestration layer as well as the application layer. Some of these things we'll build in-house, but many of them we won't, right? We'll leverage third parties like a Conduit and OpenFX. We'll leverage wallet providers. We're not going to build, wallet stack from the ground up, but we want to start to own more of these customer relationships. So on the product side, AUSD was the core. You need to build global liquidity, have global licensing, global tooling. But now we've had many companies come to us to white label our stablecoin. These are gaming ecosystems. These are banks and EM economies. And the way that we've done this, I think, is in a very intelligent and smartly designed way. If you look at the Paxoses of the world, they've said, hey, we're going to create an entirely new network, new token. That's not the way to do it. The way that we've done it is actually build contracts on top so that these new custom tokens are building on the Agora network. And so our on and off ramp in Mexico, boom, you have access to that because you're really using AUSD under the hood. And so AUSD goes in, new USD comes out. And so we're excited to announce a few of these over the coming weeks. Katana, which is a new DeFi-focused network launched by Polygon, chose us to be the core canonical stable on their network. And then the other product that we're launching is this instant settlement network, right, for stablecoins, tokenized treasury that enables 24/7 liquidity. And I touched on that a little bit earlier with the work that we're doing in traditional finance. And so who do we serve today? A lot of different folks, right? Primarily it's crypto-oriented companies, market makers, OTC desks, DeFi applications, but about 20% of our customer base are traditional payment providers, PSPs, fintechs, banks. We're working with a lot of these real-world asset issuers, and we think that in 10 years, we'll have a very small segment of our customer base be crypto forward, and 90% of our customers will be traditional businesses that are now using stable coins because it's a better and more modular form of money for their business, right? And that can be cross-border payments. It can be building their own fintech stack on top of AUSD. And so we expect this to evolve pretty significantly in the future. And so since inception, we started the business about 18 months ago. We launched the stable 11 months ago. We have 10 native deployments on chain, so almost at parity with USDC, USDT, 27,000 AUSD holders, 60,000 active addresses in the month of May, and have done over 10 billion in volume. And now we've really started to accelerate on the volume and transfer side and expect this to pick up very significantly as we announce some new enterprise partnerships over the coming weeks. So I also wanted to spend a few minutes at the end here previewing our financial OS. So today, folks come to us, they mint AUSD, It's primarily done OTC via chat like traditional market makers. But what we want to do is build a web interface so that if you're a business operator, right, in the finance department, in the compliance department, we can be your central hub of activity for everything that you're doing, not just as it relates to stablecoins, but also traditional payment rails. And so that's what I chatted about earlier, looping in some other providers and really building our APIs on top of them to provide an amazing out-of-the-box experience. And so this is the dashboard, your all-in-one hub for managing fiat, crypto seamlessly. So you can check balances, swap currencies, so go AUSD to USDC, USDC to Mexican peso fiat, but everything will be in sort of one web application that is super intuitive and easy to use. You'll have your accounts page, which is your hub for managing specific addresses. Okay, we want to set up our corporate funds balance here. This is our liquidity pool on this network. And at the beginning, we're going to make this, I would say, a little bit crypto native. But over time, we actually think that in 10 years, most folks won't know AUSD, USDC, USDT, all these different token names, right? It's the same way that when you're sending a wire from Bank of America to Wells Fargo, you don't know what's actually happening under the hood because you don't care, right? And we think that a lot of these tokens will be similar, right? There'll be sort of a code in that system where it's actually in the back end saying, hey, send AUSD from 0x123 to 0x456, and you won't even know what's happening. All you know is that you're now receiving value instantly for very low cost. This is our mint page. So not only will you be able to mint AUSD, but we're incorporating other stablecoins into this as well. And so we can be that sort of clearinghouse for a variety of different stables. On the transaction side, all of your transaction history will be in one place, not just on-chain, but also off-chain, right? So this means integrations into QuickBooks, Xero, your traditional providers that you're familiar with. One suite for treasury management. So one of the unique things about being a stablecoin issuer is that we can actually now use treasury functions saying, hey, you have USDC, you have USDT, why don't you put that into Aave, or why don't you put this into this KYC pool? And in one click, we can actually convert that from that stablecoin to AUSD and dog food, our own liquidity on chain for folks to be using. And so we're super excited for this to go out to market in a quarter or two. And then extending into payments, right? Like this is what we were chatting about, cross-border payments, invoicing, all of this done in a super seamless way with one platform to track it. And we hope that folks are using Agora to do that. But this is what I'm really excited about and is live today, which is our issuances. And so we have a number of different companies that are coming to us and saying, hey, we don't want to leak the revenue to USDC. We don't want to leak the revenue to Tether. We want our own custom stablecoin, but we don't want to deal with treasury management, compliance, operations, security. Running a stablecoin is actually incredibly hard if you're doing it right. And so what we're saying is, hey, out of the box, you can mint your own stablecoin. It'll be built on top of AUSD. You get our network. We take care of everything else. You get the majority of the economics. And now you have one beautiful dashboard to manage this token. So this is just some more of the UI. And so you can set your own mint fee, your own redemption fee. You can add the block list. We'll bake in Chainalysis, compliance right in. One of the really interesting things about this as well is that you can set a redemption fee. And so you can be the privileged arbitrager of all your coins, right? So if you can redeem it at par, but everyone else can only redeem it at 9999, that's a 10-bit window for you to make some additional income. And that's it. Thank you. Sorry for the technical difficulties, but I appreciate you guys taking the time.